here in the largest insurance market in the world. Are you ready for some stats? It's about $1.4 trillion in premium, which represents about 28% of the global insurance premium. And that's 2.5 times the next largest country, which is China. Now, the U.S. insurance market employs about 2.66 million people. There are roughly 6,000 insurers, and the breakdown is about 2,500 P&C insurers, 900 each of life, annuity, and health insurers, and a smattering of others. But because it's such a mature market, growth rates can be a little bit lower. In fact, in 2017, premiums grew about 1.8%. Now, let's talk about the different segments, life and non-life. First, let's start with non-life. On the non-life side, the total premiums in 2017 were about $830 billion, which is about 60% of the market. But the growth rate for the last 5 years has been about 4.5% year on year. And the penetration rates in the U.S. are the highest in the world at about 4%. And some of that is because a lot of the non-life insurance is compulsory. In terms of the segments of the non-life business, automotive is the biggest in the U.S., and that's compulsory, followed by homeowners, which is compulsory as long as you have a mortgage, and then commercial is very, very significant. Of course, the non-life market was particularly hit hard in 2017 by the natural catastrophes between the hurricanes, Harvey and Maria, the tornadoes in the Midwest, and also the wildfires that are out on the West Coast. But if we switch to the life insurance segment, the life segment more broadly, what we see is the growth rates are much lower over the last 5 years, less than 1% of premium growth. And then when it comes to penetration rates, the life insurance market in particular in the U.S. is lower than many of the other larger countries. For example, in the U.S. it's 3%, whereas in both Japan and the UK it's over 7%, in France it's 6%. So let's finish up on 3 specific topics: M&A, regulatory, and insurtechs. First, on the M&A front, a study came out recently that said the Americas and the U.S. region in particular had the most deals recently from January 2018 to about mid-August 2018, with nearly 100 deals. And a lot of these deals we expect to increase as a result of foreign buyers, particularly from China, Japan, and Europe. So where are they focused mostly? P&C and specialty are the primary areas, but we also are seeing some activity on the life space as well. If we shift to regulatory, all I can say is, may we live in interesting times. The regulatory environment in the current administration is viewed as business friendly. There have been efforts made around Dodd-Frank and Affordable Care Act to relieve some of the burden. It's still underway, as well as lowering corporate tax rates. Of course, the midterm elections are in November, just around the corner, and so we'll see how, if the dynamic starts to shift. And finally, on the insurtech front, what we've seen is that the U.S. in particular, in the Americas region, has the largest volume in the world, around $1.24 billion in value, as well as the largest volume in terms of number of deals. So where are these deals focused? Well, first of all, what we're seeing is that many of them are funded by traditional insurers. In fact, over 75% in the last few years have been funded by traditional insurers. And that's due to the increased collaboration between the startups and the traditional insurers. So the areas of focus, 4 primary areas. One is digital distribution, second is connected insurance, IoT, third is smart underwriting, and the fourth is new product development. And that's the state of play in the US.